welcome to the latest of the Crystal webinar series. Today we're talking bridging finance with Paul Delmonte, Key Accounts Manager from United Trust Bank. My name's Kris Corns and I'm the Operations Director here at Crystal Specialist Finance. Stay tuned to the end of today's presentation for a live Q&A. To ask your questions, there is a Q&A button at the bottom of your screen. If you could click on that, pop your question in there. We will endeavour to answer all of them at the end of today's presentation. But first of all, a little bit about Crystal Specialist Finance. Where we really add value to your business is on the specialist areas, so bridging, specialist buy-to-let, commercial, development finance, seconds and complex residentials. We are focused on the intermediary, so we don't have a direct-to-consumer element. We are purely focused on helping you complete more difficult business for your clients. Service is our driving factor. We are multi-award winning and we've been in business now for over 40 years. Over 80 lenders on panel, and we've got a number of staff within the business that are all geared to assist. And there's some of our most recent awards on there that we're quite proud of. As you can see, wins across all sectors, commercial development, bridging, and as well as best specialist distributor categories as well. And health and well-being is something that's extremely important and extremely close to our hearts at Crystal. It's a very difficult time at the moment. Obviously, we're on the verge now of just exiting one national lockdown and then areas re-entering other tiers. And with Christmas coming up as well, there's a lot of added pressure and a lot of added mental pressure on a number of people. So we are looking to promote awareness of mental health and well-being within the sector. And we're working with Mind in order to provide helpful advice on our website. And we'll be holding charity events to maintain campaign profiles and to raise money for Mind across that period as well. So what we're offering at the moment is a unique stress relieving amethyst crystal. So if you send in a case that completes before the 31st of December, there is still time on bridging to get that done. So if you do send a case in and it completes, then we'll send you a unique gift out in the post as well. So one of the key questions that we get asked is, well, why would I use you? I'm a broker anyway. Why would I use a packager? Well, especially for complex cases, it brings a number of benefits both to you and to your clients. Firstly, we tend to have much closer relationships with the specialist lenders. We don't deal with the vanilla type of business. So for us, the likes of, Halifax, Virgin, BM, etc., we don't tend to deal with. So we understand how that specialist sector operates, which translates for you into much quicker completions and much smoother transactions for your clients. We operate in areas that you might not necessarily come across day in, day out, such as bridging, commercial or development. So again, we know the questions to ask. We can steer you in the right direction in order to get that deal placed. Very often we get given exclusive offers with a number of specialist lenders. That could be rate, it could be turnaround times, it could be valuations, whatever it tends to be. We pass those directly on to you that are not available direct. And we have a panel of lenders for each business type. So if it's going with one of the prime lenders and falls down for whatever reason, we can work on a solution. We can move that to a new lender without you then having to do all of that work again. That's something that we focus on internally for you. There are a number of benefits there to using us. Now, one thing that we can't shy away from is that during these periods that we're in at the moment, things are running a little bit slower than people would like. So what can we do to ensure that cases move quicker? So firstly, ensure as much information is provided to us and the lender as possible. Any information that we provide, any quote that we provide to you, any lender that we decide the deal's going to, is based on information provided by you. So therefore, let's make sure that that's as accurate and as detailed as possible. What we want the deal, warts and all, we want to know what the problems are with the transaction so that we don't bump into the same things that you might have already come across, or we find out something later down the line that we could have addressed earlier in the process. So provide any relevant documentation. We only ask for things that are needed. So therefore, if we send a checklist out with 5 things on, please send those 5 things back in quickly, clearly, and as accurately as you can. Manage expectations with your client. We'll be honest with you about turnaround times. We'll tell you how long things are likely to take to go through, and please relay that onto your client. What we don't want to do is end up being in a situation where we're over-promising things just to keep someone happy. We'd rather be honest and upfront, and if speed is a specific problem, then we can move it to a lender that might have a quicker process or might ask less questions. Obviously, that will be reflected in the rate or the fees or something, but that's something that we can have a conversation about and work together on as quick as possible. it is still finance at the end of the day. So ask the client the questions at the start, still do your fact find, still get your KYC, still understand what the client's looking to do. We will still need those off you. So therefore, if you can get those on your initial meet with the client, then that saves a lot of time later down the line. And then finally, the last one there is to be quick to provide further info or documents when requested. Lenders assess documents at various points in the process. So it could mean that once the valuation's back, they might ask for further things off the back of that. The quicker they come in, the quicker we can move the case forward. You'd be amazed how many times customers are chasing us to complete when there's still documents outstanding that they haven't sent in. So, or you may not be amazed, depends on what kind of customers you get. But the key thing there is that when something's asked for, let's get it back in as quick as possible, just to keep that train rolling, to keep that case moving closer to completion. And for doing so, the rewards are great. Average commission there on deals that are going through at the moment on a bridge, typically around about £3,000 on an average loan. Buy-to-let is about 1,500, and development is just over 3.5. So certainly better than the 0.3s, 0.4s that you tend to see on residential cases. So looking at bridging finance specifically, so we're very pleased there to have won the Financial Reporter Best Short-Term Lending Broker and the Mortgage Awards Best Broker for Short-Term Lending this year, which followed on from our Mortgage Introducer Award last year for Best Bridging Broker or Bridging Broker of the Year as well. So basically a bridge in a nutshell, without stealing too much of Paul's thunder for later on. It's a short-term loan that can be arranged quicker than a normal mortgage. And there's various reasons why these are important. Mainly from bridging that gap between where we are today and where we want to get to. So it's a short-term only product, but they have become a very versatile, very affordable option for your customer. They're quick to arrange. The quickest we've done this year is 4 hours. An unusual case, obviously, but they can get done that quickly if everything's in place. Generally, bridging lenders are much more flexible, so they're not typically concerned with income, affordability, credit history, etc. It's all about exit. It's all about equity, exit, and who your customer is. So again, there's various lenders that have got various different appetites for different things. So whatever's more important, wherever the strengths are for this particular case, that's where we look to put the deal. All types of property can be used as security. So it could be freehold, leasehold, it could be short leaseholds. We've done a number of lease extensions this year as well. It could be property that's unmortgageable, properties in poor states of repair, or even combinations of all of those. Again, the flexibility of bridging is really its strength. We've done a number of transactions that have involved 6 or 7 properties with second charges, first charges, all in different sources, all in different condition and different levels. And a bridging trends study looking at bridging in Q3 this year. This graph is very similar to one that we've talked about previously on these webinars. The reasons for bridging don't tend to change that much, to be honest. Investment purchase is still the number one. So you're buying a property that might need to be purchased quickly. It might need a little bit of refurb before it moves on, but it's still the most popular type of bridging finance. You've also then got chain break, which is a huge area of bridging. So you're purchasing a property before yours is sold. So therefore you need to bridge that gap. You need to get the funds to purchase one before one's sold. And we'll look at a case study in a second about that. And a new one that's crept up there is regulated refinance. So people that took out a regulated bridge maybe a year ago that's coming to the end of its term that haven't been able to sell for whatever reason, or haven't been able to remortgage for whatever reason. There are bridges out there that will offer a new bridge to bridge the next 12 months to get to a point there. Now, bridging is obviously not designed to be a long-term solution. It's much more expensive than a normal mortgage, even though the rates are dramatically lower than where they were a few years ago. So it should only be used to get from A to B rather than a permanent solution. There you've got refurb. Again, typical use of bridging finance. You buy a property that's not mortgageable, whack a new kitchen and bathroom in, give it a full refit inside, and it becomes a nice property then for the mainstream. So again, very strong use of bridge. And speed is one of the key areas for bridging. We're coming up to a deadline, or possibly a deadline at the moment, of the stamp duty holiday coming to an end. And there's a recent study in September in the Sunday Times talking about the time it takes to complete. Understandably, things are getting a little bit quicker now. We're further out of that initial first lockdown that was so bad for timescales and turnarounds. But average amount of days from offer to exchange is 125 days. 23% of property sales have fallen through in 2020 so far, and the average number of days there was 19 days to get a mortgage application underwritten at that point. And if you think where we are at the moment, there's 10 days left to Christmas, and then we're into January. It's not very long now before we get to this stamp duty deadline that we're looking at. So if you do have clients that want to take advantage of that have a chain that needs to progress quickly, maybe they have a tight completion deadline, maybe they need extra time to complete a project, or maybe even they just have to complete before Christmas, that's where bridging really steps in. And that's where the skills of people like Crystal Specialist Finance, we can really get this moving forward with you by working with the right lenders. We're currently offering a beat the quote incentive. We fully understand bridging. We know how it works. We know which lenders have got which appetite. So we're doing a beat the quote. If you get a non-regulated bridging quote elsewhere, then we'll beat the quote. If we can't beat it, we'll match it. So you're no worse off from using us as you would be from going anywhere else. And it's really about getting the very best deal for both you and for your customer. There's a quick case study there. Until the end of March, anyone buying a home in England and Northern Ireland will not pay stamp duty if it's valued below 500,000. The key part is if you're buying a second home or buy to let, then you don't pay the first element of stamp duty, but you do still pay that 3% surcharge. That could be very lucrative for a number of buy to let investors. So if you buy a property that's just under that threshold, if you buy a buy to let at 499,000, it's currently roughly half price on the stamp duty. So you're saving £15,000 by getting that done. If you weigh up the cost of the bridge versus the saving that you're going to get there, it may well be a viable solution for your clients to do that. Now here's a couple of case studies. Normally we talk about deals that we've completed and we talk about deals, a wide range of deals that we've done. Today I wanted to focus specifically on deals that we've completed recently, a selection of deals that we've completed recently with United Trust Bank. So the first one there, unencumbered main residence. They wanted to complete on a refurb of another property, with the exit being sale of that unit. The client was 82, so we managed to raise the 250,000 needed, secured on this property at 0.48%, with a backup exit there that the client's already got a DIP lined up for an equity release. So should anything go wrong, as it's a regulated transaction, we need to understand the security of the client and how it's all going to work. So very nice transaction there that completed at a very low interest rate as well. Chain break to complete on a new purchase. This was secured across both the client's current residence, which was unencumbered, and the new property that they're going on to buy. Completed 320,000 across both properties, and the key selling point with this one was the fact that both properties passed the AVM, the desktop valuation that Paul will go into shortly. So it meant that there was no valuation fee payable by the client, which is a brilliant outcome. Interesting one here for some expats that were living in Dubai. The buy-to-let was on interest only, and it had come to the end of its term. There was a mix-up over post going backwards and forwards, etc. But due to the lockdown that we had at the time, the client was unable to refinance in such a short time period. So would either face repossession or default from Barclays, or having to sell the property on, which he didn't really want to do. So we arranged a bridge to repay that loan, to allow the client's time to refinance that. We completed that at 0.48% again, and we're currently working on that buy-to-let exit now to get them out very quickly from that transaction. And then lastly, this one is due to complete this week, which is an £800,000 loan on two newly completed investment properties. So the client's built them, fully completed, ready to go, and they're on the market ready to sell. The loan is to capital raise on these to allow him to go on and purchase the next one, another plot of land for him to go and purchase to build two more properties. And again, £800,000 loan completing this week at 0.48%. So when we talk about headline rates and we talk about the price of bridging finance, it is genuinely real. It's there. We're completing deals at it. We're completing quickly. We're completing on AVMs. We're completing in complex scenarios. So it's hopefully that brings to life a little bit of what Paul will go through shortly with you. So how it all works, this makes it look really simple, which hopefully it is in the majority of cases. The key thing, first of all, is we want to talk to you. We want to understand the deal you're looking to place. So we encourage that in any way possible. So email, telephone call. We've got video chat available now where you can book appointments with our BDMs virtually. Whatever it takes for you to be able to discuss that deal with us, once we understand what we're looking at and we've got that warts and all information that I referred to earlier, our new business team will then find you the most relevant and competitive product and issue the terms to you. You can discuss those with your client. We'll obviously issue as many as you want and look at various options for you. If you're happy and if your client's happy, we then just need our application form completing and sending in to us. That basically just gives us the data protection authorities and things to say, yes, we can start doing searches and moving the case forward. From there, our processing team will handle the rest of the transaction. So they'll work through the searches, they'll get the lender a dip, they'll then move to full application, valuation, offer. And a key USP for Crystal is the fact that we work with the solicitors as well. So we don't just stop at offer. For us, it's about getting the money out into the client's hand and get that deal completed as quickly and as easily as possible. So we'll work with you, with the solicitors, with the client in order to get that transaction moved and in order to iron out any issues that might arise at that point. So that's it from me for the moment. So thank you for listening. Stay tuned for the live Q&A at the end of the video. Please don't forget to ask your questions. Pop them in there and we will address them as we go through. Contact details are on screen at the moment. And if you've got anything at all that springs to mind, anything you want to know about us, about UTB, about bridging, please pop the questions in and we will answer them at the end. So thank you. And I'll now hand you over to Paul. Over to you.
Hi, my name is Paul Delmonte. I'm the Key Account Manager for United Trust Bank. I cover the North West and Midlands area. Just want to say a big thank you to Crystal for allowing us to present to you all today. And today we're going to be actually going through our brand new bridging presentation. So we'll get started shortly and I'll share my screen now and we're doing a Q&A at the end. So please feel free to take down any notes, any questions you have, and we'll go through them at the end of the presentation. So as I said, I'm going to share my screen now and we'll go through it. So you all should be able to see my screen now, which has the UTB bridging presentation on. And just to give you a bit of background about myself, I've been with the bank for over 2 years, working for the property finance department that covers bridging, development and structured finance. And just to give you a little bit about the types of transactions, which we'll go through in a bit more detail within the presentation, but we can assist with regulated, unregulated, first and second charge bridging finance, from your classic bridges and downsizing to professional property refurbishments and portfolio restructuring. So that's all for this page. We'll continue now to the background, which is basically on the United Trust Bank as us as a bank, gives you the information of where we started to where we are now and where we want to be going forward. So just to give you a bit of background about the bank, we started in 1955, lending for development finance and retail deposits. Fast forward to 2010, where we started doing bridging finance, which is the FCA regulated, unregulated short-term funding. Then we moved to asset finance, where it's hire purchase, finance lease, and refinance of a wide range of assets. Then we started in 2015 to do second charge mortgages. Then more recently, back last year now, 2019, specialist first charge mortgages and motor finance. And this year, which we'll go into a bit more detail on the next few slides, but AVMs, dual legal representation, biometric ID verification softwares, fast track bridging, and there's more to come for next year. So moving on now to the type of properties that we lend on. So we do actually have a flexible view on property types. So the first one we've got here is the owner-occupied residentials, so client's residential home, or CBTL, which is a consumer buy-to-let. The next one is the residential investment property. Moving on to semi-commercials, we do consider semi-commercial. However, it does depend on the downstairs. So for example, if it's a trading public house or a restaurant with a flat above, chances are we probably won't look at that. However, please give Crystal a call to discuss those types of cases, and then they'll touch base with us and we can discuss it. Non-working farms, now it's quite important to point out at this stage with non-working farms that there's no agricultural ties, and also property portfolios. So we can actually cross-charge over multiple buy-to-lets to be able to help the client to raise enough capital to be able to buy one single unit or multiple. So the next page, we're going to be talking about our USPs for our product. Now, these USPs are the reason why we're one of the main lenders within the market. So we're going to go through them now and break them all down. So product highlights. So we do regulated and unregulated first and second charges. We have no exit fees. We charge daily interest after the first month. So unlike some lenders that do monthly interest, if a client took out a facility on the 2nd of January and paid it off on, say, the 2nd of April, they'd only actually pay January, February, March, and only the 2 days in April that that facility was outstanding for. If you're using a lender that does monthly interest, they would actually have to pay the full month of April, even though that facility was only outstanding for 2 days within that month. We lend to mature borrowers, so we actually don't have an upper age limit for mature borrowers. I had a transaction last week where a client was 95 years old. He was selling his 5-bedroom detached house and was buying a 2-bedroom bungalow. No issues with that case whatsoever. AVMs, so our desktop valuations, and we also have dual representation available for regulated cases. Dual rep is where a solicitor acts for us as the lender and also the client. We have wide coverage, so we lend in England, Wales and Scotland, and we are postcode specifics in Scotland. Refurbishments, so we do light refurbishment and heavy refurbishment, and how we define what is light and heavy is just simply if the works that's being carried out on the property, if it requires planning permission or fall under PD, then it will be heavy refurb. And if it was a kitchen bathroom, for example, so client's gone to auction and they want to rip out the kitchen and bathroom, we still class that as light refurb because it doesn't require planning or fall under permitted development. There's multiple loan purposes where a bridge can be used. It's not just a chain break, which I believe is the only loan purpose is discussed within CMAP, but we do downsizes, auction purchases, we capital raise, development exit, and there's many more. So ones like probate and lease extensions and properties that are being bought at an undervalue, there's loads. We could sit here all day and talk about the amount of uses a bridging facility has. So service highlights, we have biometric ID, which is Nevo, which anyone who doesn't know what Nevo is, it's the biometric ID system for clients to be able to self-certify themselves using a smartphone. And that has been a fantastic tool for us during lockdown. We have automated valuations, as said before, for qualifying loans. So loans up to £1 million, maximum 55% loan to value gross, and max £1 million property value per security. There's multiple points of contact as well. You don't just have, like say, the underwriter, or you don't just have just the BDM. You have the underwriter, business development manager, and also you have the internal sales managers that are there to help as well. We do have attractive rates, and they do start from 0.48% for anything below 50% loan to value gross. So on to the next slide, where we'll be talking about the people. So who do we lend to? So we lend to UK citizens and expats, foreign nationals, UK companies and trusts, offshore companies and trusts, SPVs, funds, and executors. As said in the previous slide, we don't have an upper age limit on mature borrowers as well. So moving on from people to process. So you've got a case, it fits. How do we then get it from A to B to funding? So you approach us with the case, we'll send you indicative terms alongside with a quick inquiry form. That's a PDF form that's interactive, so you can type over it. Once the customer accepts those terms, you will then complete that quick inquiry form and send that over to us. Once we have that, we will upload it to the portal and we'll issue the decision in principle and ESIS alongside with the full application form. That application form, the client will need to sign it so we can carry out the searches, and then we'll instruct valuation once we get that back in. The case is then signed off and the offer's produced, and we'll also instruct solicitors at that point. Now, once we've got all the solicitor's requirements back and the full legal pack is in with the underwriter, they'll put the file together and the binding offer will be issued and returned. At that point, we'll send the funds over to solicitors and we complete on that transaction. More recently, we've actually created a separate product called Fast Track Bridging. Now, yes, bridging is meant to be fast, we get that. However, what we've actually realised is a lot of cases that we see should kind of underwrite themselves. So what we've done is we've created a separate process for fast track cases. So cases that fit this specific criteria actually follow a different process, and which is an abbreviated process. which allows the underwriters to focus more on the more complex transactions, which would naturally speed up both types of business. So we'll go through the criteria here. So is the exit coming from sale, refinance or secured property? If the answer is yes, we move on. Is the LTV below 55%? Yes. Are there 2 or less securities? Yes. Application to individual and company? Then we move on. Yes. Little or no works at the security property? Then we move to the next one, which is the loan gross 500k? And then is the borrowing entity a trust? So for trusts, we know they're a little bit more in depth because the amount of beneficiaries some trusts have, all the paperwork needs to be structured differently. So for that would follow the standard process. But for cases that tick all those boxes, fits the fast track bridging process. Now, as mentioned just before, it follows an abbreviated bridging process, offers within 48 hours. You have a dedicated fast track team. So you have obviously the business development manager, you have a designated fast track internal sales manager, and you also have an internal, a fast track underwriter who will look after your cases as well. We also have free AVM desktop valuations available for all cases under 55% gross. Moving on to the next slide, 1 UTB. At the start of the presentation, I mentioned that we are the property finance department. So we actually look after development finance and also structured finance alongside bridging. What I'm going to do now is going to go through a few bullet points on each of the criterias for development finance and structured finance. So development finance, clients must have completed 3 projects previously, so they need to have experience. We lend to existing and new customers. Loans are available up to 55% of the GDP. Loan terms available up to 36 months. And loan amounts between 1 million and 25 million per project. So moving on to structured finance now. They have a variety of other securities can be considered. They do unregulated transactions, loan sizes from 500,000, and they lend on listed properties as well. So moving on to the next slide, which is case studies. We've included this slide because it actually brings everything we spoke about throughout this presentation to life. So the first one is developer exit. So project type, 2 detached properties, 1 existing family home and 1 new build at second fixed stage. Loan amount was 800,000. And the features within this deal, 2 security properties on a single title with 1 occupied by the borrower, bridging facility significantly cheaper than existing funding with existing lender, and facility would also provide funds to complete the build if required. Developer exit is a bit of a hot subject at the minute. Properties are taking a little bit longer to sell. So the standard 12 months you get from a development finance lender isn't always sufficient if the clients are looking to obviously sell the properties on the back end. So we can come in, avoid those default charges and extension fees and repay back that development facility. So the next one we've got here is downsize. So downsize relocation, loan amount was 165,000. The special features with this, we offered dual representation and AVMs as well. And our AVMs are completely free. So it aided the cost and also the speed for completion. Unique property acquisition. So this one was also a downsize relocation. Loan amount was 1.35 million. And the special features with this one was the purchased property was previously a child's care home with C2 usage. Security comprised of a combination of first and second charges on the borrower's mortgage existing residence. And it was a time-sensitive completion date as well. We completed this deal within 3 to 4 weeks, where other lenders also turned this one down because of that C2 usage. We're able to fund this transaction. So just to go over the last slide, which is the summary page, here we're going to touch on a few of the points that we discussed throughout the presentation. And the first one is dual representation, which is where a solicitor acts for us, the lender, and also the client for regulated transactions. We have AVMs available, which is your desktop valuations, which are completely free. We're flexible on property type. We have access to Nevo's biometric ID system. We have fast track available for qualifying loans. We have an internal sales support. and we have wide coverage. So we lend in England, Scotland, and Wales. So that concludes the presentation. I hope that was okay for everyone, and really looking forward to answering your questions in the live Q&A very shortly. Thank you for your time.
Thank you, Paul. Really enjoyed that presentation. Thank you all. That concludes the presentations. I hope you all picked up something from that. Now we can move on to the live Q&A.
Here we go.
I hope you found that really interesting, as we did. We've had a few questions come through as well, so thank you for typing those in as you were watching the presentation. The first one's for you, Paul. Arteta, the man or not? No, I'm only joking.
Yes, he is. He is the man. He is the man. Just another minute.
Yeah, the first one we've had through is about the beat the quote offer that we've looked at on there. Is it just the fees or just the rate? To be honest, it's whatever we can do to make the deal better for the customer. We truly believe that we are experts in bridging, and we've got access to some excellent lenders such as UTB that Paul's been talking through today. So whenever we can see a deal, we can look at what's been offered and we can try and find either a better home or a better package that makes that as attractive as we can for the clients. So I hope that answers that one. And Paul, do you want to take the next one? Your maximum LTV currently?
Yeah, so currently we're at 60% gross. We were at 75% gross. I think just for the simple reason why we've had to scale back is because of volume. I think that's been the main issue during lockdown. You know, we've obviously been available and still lending throughout lockdown. We haven't pulled any transactions at all or anything like that. Anything that was like sort of post offer at the original loan to value brackets was still honoured, so you know we didn't cancel anything at all. I think it was actually anything post valuation actually, so anything where a client had already paid, so already had financial loss if you'd like, or they've already invested financially in paying for the valuation. Yeah, I'm sorry, froze then. Can you hear me? Yeah. So we honoured those. So because of all the other lenders that pulled out the market, we obviously had to make sure that we weren't getting that sort of bottleneck effect. So we had to scale back. So currently 60% gross. However, we're in very advanced stages of increasing that, which we'll update you within the next few days.
Excellent. And from the wider market, 75% is still available from some lenders. There is actually one lender looking at 80% currently, but it is a very specific niche as to what they're looking for. So if you do need anything higher than that, then obviously speak to our underwriting team and we'll be able to try and find the best home for you from there. I had a question in about cross-property lending. Would a valuation on each be required?
Again, it depends on loan to value. So if the loan to value is below 55% gross, then we can AVM. We can AVM both properties. Normally we see that quite a lot actually. People like to cross charge over multiple securities to bring the rate down. Where securing the bridge on one single security may be 60%, where you'll be 0.59. Some clients prefer to go, well actually I may as well chuck my residential in the mix, which bringing the loan down to below 50%. So then you get a 0.48 rate. So you can see there's quite a dramatic difference in sort of rate, and then we can AVM both securities because it's below 55%.
Yeah, and I think on one of the case studies that we touched on earlier, we've actually completed a deal with you recently like this, where we took an AVM over both and it brought the LTV right down. I think it did work on just one, but it made it much more expensive interest rate wise. Sorry, not much more. Made it more expensive for the client interest rate wise when there's a property sitting there not doing anything anyway. So it makes sense to structure the deal the easiest, cheapest and best way possible for the clients.
Yeah, it's a big saving. I mean, look, valuations, it's the only thing we charge up front is a valuation. That's the only cost. So if you've got a client who's property rich but not cash rich, then there might be a way of doing it. You can cross charge over multiple buy-to-lets, and it's not an issue for us. And then you're saving on the very front end because you're not having to pay out for multiple valuations if we keep that LTV down, plus the rate as well. So you're getting the lower rate, not just the AVM.
Yeah, and speed is another factor on AVMs. We've had a number of cases.
Great for solicitors. Yeah, exactly.
Yeah, we've had a number of cases on valuations recently where valuers might be isolating within certain areas. So I think we had we had an issue in Norfolk a couple of weeks ago where we couldn't get a specialist valuer to go out in anything under 4 weeks because the firms that were available for lenders to use, the main valuers were self-isolating themselves, which meant there was a massive backlog of appointments. So it's not even down to lockdowns as such, it's just down to value availability. And with an AVM, you don't have that problem because that's done, what you're turning around same day, aren't you, at the moment, Paul, on those? Yeah, so it's a big win speed-wise for customers as well.
Yeah, exactly.
We've had a question about title issues. I think that's a little bit specific for this webinar, but I will pick that up offline with the participant that's put that on because it's quite a complicated question. But I do think we do have a solution for that. So yeah, I will certainly pick that up. When it comes to affordability, this is quite a good one for residential brokers. If a client has maxed out borrowing on a new mortgage for an onward purchase, but wants to bridge their existing property whilst waiting for a buyer, how does this work and does it work at all? From my point of view, yes, because normally on a bridge, affordability doesn't necessarily come into it unless the exit is a refinance. The exit, the affordability as such is in the equity, it's in that sale of the property. If the property's worth 100,000 and you're borrowing 60,000 against it, you don't need to provide income to back up that 60 if that property's being sold. If you're getting a remortgage for the exit for the 60,000, at that point, then the lender needs to sense check that there is a mortgage available. Paul, I think that pretty much answers that one. As you got
it does. Yeah, spot on. Yeah, absolutely spot on. And whenever we're rolling up interest, we don't need to see income unless the exit is going to be refinance. Because obviously from the refinance point of view, we need just to make sure that they meet affordability from the AIP provided. If the exit sale, we don't need to see income at all if the interest is rolled up. As we know, for regulated transactions, all of them have to be rolled up interest, which is an FCA regulation. So that's something that we need to happen. But if for a non-regulated transaction, they can pay monthly, but again, obviously they need to meet that affordability criteria.
Excellent, thank you. Question about fee splits. Can you provide a bit more info on the broker fee split when using a packager? Obviously, it's different depending on which packager you go to. Currently, we're not charging any broker fees at all, and we're paying away 55% of the commission that we receive back from the lender. If there's a scenario where we have to move on that, then of course we'll discuss that with you. But that's the typical fee arrangement we're looking at the moment, which makes it very lucrative for you guys to be using us for bridging. Minimum loan on refurbs, Paul?
Minimum loan on refurbs, we do say 200. Well, it depends. If it's the light refurb, then obviously it doesn't really make a difference, because obviously if it doesn't require planning permission and doesn't fall under permitted development, then we class it as a light refurb and it's standard bridging rates. So, as I said within the presentation, if a client's going to auction, which we see a lot, client goes to auction, they want to rip out the kitchen and bathroom and make it a bit more livable. It's standard bridging, standard criteria. It's just our minimum loan that needs to be met. That's all. In terms of heavy refurb, we do have a minimum of 250,000. So that's the loan size. So the loan size has to be a minimum of 250,000. Now, what we do for heavy refurbs is we lend to 60% towards the purchase price, and then we lend 100% of the build costs, as long as it's no more than 60% of the GDV.
Okay, thank you. And a lot of that, the answer to that question comes down to the definition of a refurb. Lenders view them very differently. Some will class it only needing planning in order to be a heavy refurb, and anything less than that is light. Others take a much more specific view on the definitions between a light refurb and a heavy refurb.
Well, some actually have light, medium and heavy, which just completely blows my mind, because it's too confusing. You say, well, I'm going to replace the kitchen, well then that's a medium, but I'm only going to do a lick of paint internally and replace the carpet, well that's light. I'm going to do a wraparound extension, well that's heavy. We just keep it simple. If it requires planning and fall under permitted development, it's heavy. Any other works other than that, it's standard. Just keep it simple. Yeah,
brilliant. That's exactly the message that we give out when we're discussing it with brokers. When we We don't have options on our inquiry forms to say light, medium or heavy, purely because the definitions are so wide. So it comes back to, as I touched on in my presentation, about that conversation. Let's understand the deal. Let's work out what the client's looking to do. Let's not try and make it fit in boxes or try and shoehorn it into a certain area. Let's understand what's and all what we're looking to do, and then we can try and achieve a solution for everyone on that.
And we need to know what the works are, but again, it's as long as everyone's up front at the start and says, no one's going to say, well, it's a kitchen and bathroom, then the valuer goes out, which you've had a couple of times before, and it's a building site, all the ground's dug up around the side, there's some brickwork and holes and you just think, when we get that back, obviously it's a bit more work than what the standard, what we were told. Just tell us up front, and then we can be, as a pun for you, crystal clear at the start of the case, and we can just move on and it just runs smoothly.
Exactly that. The biggest issue we find with delays on cases is where things don't turn out to be the way that we're all expecting them to be, and that could be whether the deal's being positioned in a way that makes it look better, or the client's just misunderstanding what they're explaining to us. So the key bit is really getting to that truth, that source of truth, as early as we can, and then everyone can work with it.
Yeah, exactly.
The question on the cross charges, would it be a second charge on the main residence, assuming there's a first in place?
Correct. Yeah. So how we do it is obviously, because with regards to first and second charges, we price differently. So how we work out which rate to charge is where the majority of the equity sits. So if the majority of the equity sits in the first charge, then we price it. We don't blend rates, is what I'm trying to say. So if the majority of the equity is in the first charge, we price it first charge rates. If the majority of equity is in the second charge, then we price it second charge rates. So there's quite a big difference, I would say, in terms of rate. Anything below 50%, we're 0.75, and then we obviously scale up. But as long as the total borrowing isn't more than 60% gross currently, which includes the first charge, then it's fine. But yes, we can look at doing a second on the residential, as long as there's equity within that, and then obviously a first on the onward purchase, or a first and a first with two buy-to-lets, or secure it on their residential. We see that quite a lot actually, where clients use their residence as like a banker property. They kind of use it as like a big credit card, and they just it's like a rolling facility. So what they do is they'll use their residence if they've got equity in there. Whether it be a first or a second charge, they'll go to auction, they'll secure it on the main residence, they'll buy the buy-to-let, exit being buy-to-let refinance, pays off their residential, the bridge that's on the residential home, and then go again, and then go again. And what they do is they use that equity, even though it's not hard cash sat in the bank account, but it's a tangible asset that they're able to utilize and grow a portfolio. We kind of see that quite a lot, and it's a very useful tool.
Excellent. And it's something that more and more people are using as well. It's not just a product that you only use if you're desperate, or a product you only use for auction. It's a product that some really big investors are using. Property landlords with multiple properties. They're just looking to get the maximum out, or to raise a deposit, or, as Paul touched on, to use a property as that banker property, that they can get the deposit out of that to purchase a new one, refinance that, pay this loan off, and then go again. And it's a really nice solution for people when it's used properly.
And we don't have exit fees, and we don't charge, and we charge daily interest rate. So, as I said in the presentation, there's no exit fee. There are lenders that charge monthly interest, and depending on when you pay it off throughout the month, you're still liable. So it doesn't matter if you pay it off on the 1st or the 30th or the 31st, you're still liable for that full month's worth of interest. But they also say that there's no exit fee. Well, if you're paying it off on the 1st of April, and you're paying for the full month of April, then it's just a play on words. It's an exit fee. You're paying interest for a facility that's no longer outstanding. So, that works very well with those types of transactions, like development exit bridging, again, with that daily interest, it works really well in their favor, because they're able to retain as much profit as possible, and they're only paying interest on what balance is outstanding. So it works really well for clients, and that's what we've seen, and we've had great feedback from that as well.
Yeah, excellent. I've had a specific question about a scenario. If a client needs to bridge to rent out their existing residential whilst they're buying a new one in order to get 6 months rental to allow a buy-to-let, does that work? Well, yes, because they're buying a new property. So that looks like a nice straightforward one. The exit would then be a buy-to-let mortgage in the future. So we just need to see that the client's eligible to get to get that now.
Yeah, straightforward.
Yeah, so as long as the credit's okay there and the rental income passes a couple of lenders' stress tests, then yeah, there won't be a problem with that. The difficulty would be if the rental income didn't work on a buy-to-let, then the exit's obviously in question a little bit more. So we just need to see that it passes an online calculator from a buy-to-let lender, and then that should be fine.
Yeah.
There's another question here about specific costs on a specific deal. So I'll answer that one on the chat rather than sharing that with everyone, because it is a little bit specific. I suppose for me, timescale wise at the moment, Paul, how are things looking from yourselves?
Looking great, looking really good at the minute. We completed a transaction a couple of weeks ago within 8 days, and that wasn't even a fast track one. We issued a decision in principle in ESIS yesterday within 15 minutes, and that was like on fast track. But general timescales are within an hour or two for decision in principle in ESIS. Completion, I get asked this question on a daily basis, and I've been doing been in specialist finance for nearly 6 years, and I don't think there's been a day where I've not been asked the question, how quick can we complete on this transaction? Yeah. It very much depends on a variety of different things. In terms of SLAs internally, we're fine. We're working really well at the minute in terms of turning around cases, even though we've got obviously a very, very large pipeline. We've employed new staff. We've got 2 new underwriters, 2 new internal sales managers as well, which is helping that SLAs, that speed. But I would say on an average, we're looking about 3 to 4 weeks, I would say on an average. But again, I've got ones that have come in March that still haven't completed yet. As I said, I had one 2 weeks ago that completed within 8 days on the standard process. So in terms of internal process and internal SLAs, there's no problem at all. We can get them completed extremely quickly. Again, we are very much relying on solicitors and if evaluers when they can get out if needed, and things like that.
Yeah, we've had a deal with you for probably 6 weeks now, sitting in completions, ready to go, everything signed off and ready, but the client just keeps pushing back the completion date by 2 weeks every time because he's got other things that he's engine on. So yeah, time to completion is always a question that we get asked as well, and it's probably the hardest one to answer. Exactly. We completed a deal in September that came into us on a Friday and paid out on Monday, and the only reason it didn't pay out on the Friday was the fact we needed a wet ink signature back on one of the documents. So things can go as quick as systems and processes will allow them to. Exactly. Yeah. And
clients' willingness to do it. We get it. We understand as a lender, and we see it all the time, being used as a backup. We understand, we get it. That's people are waiting for that chain to kind of, making sure their onward purchase and their sale of their existing is secured and that goes through smoothly. But obviously, they want to make sure that they can obtain that new security, so they need to just make sure they can get finance through a bridge in the mean. So we get it. Sometimes we can be used as a bit of a last resort. So it all does very much depend on the client. What's their willingness to actually go ahead and just really drive it. We can go as quick as the client can go and as quick as the solicitors can go. So I think that's quite fair.
Yeah. Exactly. The last resort point's a really good one because we've talked all through this about how useful bridging is and the problems it solves and how cheap it is now compared to where it used to be. Even at the lowest bridging rate, you're still looking at roughly a 6% interest rate. So if you can get a buy-to-let or you can get a residential, then by all means clients should be doing that. It's where you can't, for whatever reason, that bridging becomes then an essential tool to get you from where you are today to where you want to get to in the future. The question, can you use a residential security for a limited company purchase? I suppose pulling money out of your residence to put into a limited company.
Yeah, we can do that. Yeah, that's pretty straightforward. If the residence in their personal name and the buy-to-let's in a limited company name, we just third-party legal charge, solicitors, no issues at all.
There you go, nice and simple.
It sounds, but I get the question. I know it sounds like a simple answer, but it's a very valid question, and
100%.
Because you could look at it does sound a lot more complicated, and I think that's part of this whole bridging and people's understanding on it is that there are simple solutions of getting these things done, even though the question is actually a complex question, and that is a very valid question. it sounds like then the way I answered it, it was like, oh, right, well, surely I should have known that. But that's not the case at all. You know, these things are questions and things that that come up we see on a daily basis, but you might not necessarily see. So it might be brand new question. You think, oh, wow, I've never come across that before. But there are simple answers to these things. And that's why I always say to everyone is that no matter what kind of case you get, no matter if it's really, really, or you may think it's really, really complicated, there's probably a way that we can work it out. And it is just as simple as one form, just to get the case in and get it funded. Just trying to think of an example. Can't think of one now, typical. But, you know, things like that, it's just, we get them, we answer straight away. So within 5 seconds, we've answered that question. And it could be sometimes a difference between, well, actually, we can't do it that way. It has to be all in a limited company name, or it has to be only in the personal name. But within 5 seconds, we've answered it. And that could be the difference between getting the deal in or not. Do you see what I mean?
Yep. And it's getting the client from where they are to where they want to get to.
Yeah, which is what we can help with. And that's why we're very personable. We like to chat on the phone, talk a case out. You know, we've got a great relationship with you guys, Kris. The guys always call me and say, well, would this work? Yeah, no problem. Here are the terms, you know, terms within 5 minutes, you know, so we've got a great working relationship. A lot of the questions, you know, your guys are extremely experienced. They know what they're doing. And they're good, really good at what they do. So 9 times out of 10, your guys will know it anyway. But there are some times, and even you know, I've been doing this for years now. You know, I still don't know everything. You know, I still have to sometimes ask and get the information. But it's how quickly you do it. It's how, because everything is time precious with bridging. As long as you get back to people quickly, you're fine. We're good.
Yeah, and the knowledge is a key bit, because, you know, we've talked about our experience and the awards that we've won, and, you know, the fact that we're experts in specialist finance, but we haven't seen everything. And that's where that conversation and that transparency is important, because there'll be a scenario that's extremely complicated. There's one that's just appeared on here, which I'm going to throw at you in a second, Paul. But there's things that pop up. We had a deal very recently that was a really nice buy-to-let property in London. It was a bridge. It was £4 million property, £2 million refinance needed on it because the loan was expiring. But it didn't have an EWS1 form at the time. Right. And that was something that hadn't come up before on a number of deals. So it was something that the broker's scratching their head about, we're scratching our heads about, the solicitor's scratching their heads about how we can get around it, because, you know, this property was built maybe 18 months ago. It was sold off plan. It's a really nice development. It's let for great income, but technically at the moment it's unmortgageable. So what's the solution for the client, and how do we get around that? So there's always things that crop up that even experts in the industry have to get second opinions on and things from there. So what we're hoping to achieve from these webinars. Yeah, there's nothing wrong with that. What we're hoping to achieve from these webinars is the fact that for those of you that don't do bridging every day, or those of you that might not have ever done a bridge before, that hopefully at the end of these, you'll have a bit more confidence that when a client is talking to you about a problem, that you've got a solution, or at least you know where to go for that solution. So you're not sending the client away. You're saying, yeah, let me make a couple of calls and I'll come back to you in an hour.
I can't tell you how many times I've you know, called people, you know, made appointments, and, you know, to catch up and to go through like criteria and things like that, where where the individuals turn around and said, oh, I've not had a bridge for about 3, 4, 5 years, or I've only ever done one in my whole lifetime. And you said, okay, that's fine. But even just going through it for half an hour, just sitting down and going through the criterion and the ways to identify where a bridge will come in use. The amount of times I've gone to those meetings, sat down, had a coffee, had a chat, and gone through the criteria and the telltale signs for where a bridge will be used. The amount of times 2 weeks later, I've had 2, 3, 4 cases where a bridge can be used from that individual. So it's like I can't believe, you know, sometimes it's just having the understanding and knowledge of that light bulb moment, go, actually, there's a way of doing this, and we can use a bridge for this. And again, there's nothing wrong with not knowing the answer. As I said, there's loads of time. I'm not perfect. There's always times where I need to go away and ask the question. But again, when I get that question again, if I ever get that question again, I know the answer. And I think sometimes that's all it is. And as I said in my my presentation is that I mean, I've not done CMAP, but I've spoken to a lot of people who have, but I think a chain break is the only scenario that it goes through with a bridge when there's a list as long as my arm of ways where a bridging loan can be used, and sometimes it's the only way of getting a client out of one situation into another. So, you know, it's just about just pick up the phone. I always say that, just pick up the phone, have a chat with us or with yourself, and then you can obviously relate it back to us, and we can answer it, and that's how it works.
Yeah, we've got a number of slogans on the walls throughout the building here at the Crystal office, and one of them is "Don't say no, say how," and that's ingrained in every person within our business. That if there's a problem, we're not just going to say sorry, we can't do that. Let's push that deal away. We're going to look at a way to get that moving forward for the client. And yes, it might not be the solution that they hoped for at the start, or it might not be a 1% interest rate or something like that, but it's a way to get from A to B, and there's a plan. And it's about getting that client back on track as quick as possible, especially with the stamp duty deadline coming up as well. There's conversations, and there's different articles around as to whether it will be postponed, whether it will be extended beyond the end of March. But we really haven't got a lot of time to get to that point, and you only need a slight delay on valuation or a delay with legals or something, and there could really be a problem there. I haven't moved for a while, the lights have gone out.
It makes your trophy cabinet look really nice though.
I should have done that from the start. So I've seen from a number of lenders, a number of networks, for example, that they're now encouraging all of their brokers to be looking at alternatives. So if someone's starting a buy-to-let now or starting a purchase now, what's their contingency in case it goes beyond March to pay that additional increase in stamp duty? Again, yet another scenario where bridging can really step in and help.
Yeah.
I think that covers off all of the questions that people have put on, and we've kept you all busy for an hour going through and listening to us talk. So just want to say a massive thank you, first of all, to everyone for attending. I hope you found this useful and interesting. And please keep an eye out for the next ones that we're putting through. And a huge thank you to Paul, really informative as always, and obviously great Q&A from yourself. So thank you.
I could talk all day, mate, so you better keep me off. You better keep me off, otherwise I keep everyone here for another hour.
Brilliant. Well, thank you, everyone. Have a great day, and hopefully see you on the next Crystal webinar. Thank you.
Thanks, everyone.